Welcome to Hedge Fund Tips with Tom Hayes. I'm Tom Hayes, and this is your 299th VideoCast podcast for the week ending July 9th, 2025. Hope everyone's having a great summer, had a great Independence Day. We'll get started with some social and family photos, then we'll get right down to business. My goal is this could be our first 1 hour podcast in a long time. Don't get used to it. Next week, I'm in New York doing TV. We're going to have a lot of content, but we got a lot of good AMAs this week, so it might wind up going over an hour. Famous last words. I got my Hedge Fund Tips t-shirt on. You can get it on the website. But first, I want to thank Mateusz Tritnik from Slovenia, Montenegro, Croatia. He's got houses all over the place. Very successful businessman. But more important than that, he's got his VF Corp Timberland gear on. He went to visit the Timberland store in Irvine while he was here. He's visiting with his beautiful family, doing Disney, doing San Diego, doing Orange County, doing Los Angeles, the whole entire coast of California. And where did we go for dinner? Of course, we went for steak at a restaurant on Pacific Coast Highway in Newport and had an incredible time talking business, markets, life, and sharing his success stories and how he created multiple successful businesses. It was just an awesome time, and very grateful for that. So thanks for that. Then got to take Annabelle and Caitlin. Mimi was still in Croatia. Amazing place. If you're ever in Newport, go to Ocean 48. Blew my mind. And I've been to a lot of good restaurants. Get the chicken fried lobster tail appetizer and the crab and all that stuff. There's some of my buddies playing. There's Kenny owns half of Huntington Beach. My buddy Garrett, what a stick, can fly pretty much any air vehicle, commercial pilot. And Ryan's got the best pizza places. He also has an AI company, but as a hobby, he's got the best pizza on the West Coast at RIIP in Huntington Beach. And we went there after I played. This is the pizza. That's Caitlin and Annabelle. Thanks to my friend Daryl, had us out to Newport Beach Country Club for a scholarship tournament. There's, I call him Rick the Stick. John and Jesse, we had an incredible time out there. And here's some pictures of Mimi in Croatia. And she just got back, by the way. That's why the podcast is a little late. I was so excited to see her. That's our 4th of July. It was not as good of a weekend as it seemed. I got whammoed with a ton of unexpected administration stuff I had to deal with. No bueno, but I did carve out time for the family to enjoy. That's Rick Caruso's yacht in the background, by the way. Those of you West Coasters, big real estate guy, REIT guy, and at our friend's David's house. Had a wonderful time. That's Annabelle on the kayak. More pictures from Croatia. That's the parade in town. Was pretty incredible with my friend Tony and Caitlin, obviously, right there. My beautiful wife, as you know. And then they had these muscle cars going down. It was literally like the 50s all over again. Total Americana, American flags, muscle cars. It was awesome. And there we go. I'm one stroke away from the goal. I got to get to high single digit handicap within 4 years. I got to do it by the end of this year. I've been playing 3.5 years and change. 10.9 index, first time with a 10 handle. Clicked over yesterday. Had a really hardcore match against my friend Brian. 9 holes I could only play after the markets closed yesterday. And then I had to go back and do more stuff. Been one of those kind of weeks, but shot a 40 from the golds, and that brought me down to 10.9. So I want to break 80 one time. That's a goal this year, and I want to get to a 9-9 or better, high single-digit handicap. Keep praying for me, because just by showing this, the golf gods are probably not going to be pleased and humble my butt one more time. But hopefully after the member this weekend. So, Charlie Munger, you'll do better if you have passion for something in which you have aptitude. If Warren Buffett had gone into ballet, no one would have heard of him. That's from Charlie Munger. And here's John Templeton. Learn every day, but especially from the experience of others. It's cheaper. Tuition on your own can be very expensive. All right, let's get down to data. Credit card delinquency rates peaking and starting to roll over. That's the good news. DHS customs and excise taxes monthly $1 billion. When Trump talks about all the money coming into the Treasury, he is not kidding. When he put it on in 2018, it went from 4 to basically 8.5, doubled the tariffs. Now they're up to $28 billion a month. That's bringing in a lot of money to the Treasury. Let's hope he doesn't go overboard and slow things down, but it seems like he's at a really good level that no one ever thought he would accomplish. So we'll see how that goes. Boeing monthly aircraft deliveries went through the roof. I mean, it's amazing to see. It's now like $229, and just a couple of months ago, no one would buy it at $135, except for the incredible, amazing people on this podcast. You took advantage, and how you doing? That was a great thing. Historically, all-time highs tend to cluster, so we're probably due for a lot more. Buying undervalued oil shares seems like a good bet. Hasn't been this low since 2000. We got a new servicer we're taking a serious look at, and maybe some E&Ps. We do want to get some more. Comstock's gone up a lot. It's resting a little bit. It hasn't come back enough, though, to put new money to work, but we're holding everything we got and happy as a clam. S&P 500 price and earnings. So earnings have lagged price according to this, but that's what bull markets look like. Equities typically rise when Fed resumes cutting. So you're starting to get rumblings about shadow Fed, which will make Powell a lame duck. I think we're going to see it. I think we could be surprised in July if the CPI numbers warrant it, particularly when you're seeing all the articles coming out saying the jobs report was weaker than it looked, which is what we said right away. Buying the dip has been a winning strategy this year. No S. Sherlock. Global equity performance and the US dollar. Global equities outperform when what? When the dollar declines. That has been the case. Very unpopular last year, except for you guys who listened in and took advantage and benefited from weaker dollar, stronger international equities. Annualized tariff revenues collected through, that's the same chart, but annualized it comes out to $360 billion. That's pretty serious. And then those gold cards, that's supposed to be some serious amount of money, like $700 billion, if that's true. So we'll see. High yield, you pay for play, get your citizenship here. High yield never really priced in a recession. We had focused on that a little bit in some of our data when everyone was afraid. Staying private for longer, a lot of companies. What does that do? It creates less supply of public securities, which means the same amount of money chasing fewer goods means prices go up. That's why the indices are going up in addition to global liquidity. Number of days between all-time highs, 913 days since last all-time high for the Russell 2000. You got to go all the way back to the early 2000s, which was the biggest rally in the shortest amount of time in small caps. That is the next rip your face off rally that's already started. Very excited about that. Number of first-time buyers collapsing, compliments of Shay J, who is sitting on his thumb and will be replaced actually or symbolically, either way, soon, unless he does the right thing in July and has the opportunity to go out like Seinfeld at the top. Private sector jobs growth year over year, rolling over. Tax credits available for new car purchases until September 30th. How much interest you could deduct. That's going to be huge for the next two. If you remember, 10,000 tax deduction on interest for cars made in the US. Hong Kong tops global IPO rankings first half, unintended consequence of stupid policy. Those IPOs should be happening in the US. They are happening in Hong Kong instead. Make Hong Kong banks great again. A big Q2 quarter should have bulls smiling. Average returns 4 quarters out after a 10% plus quarter going back to 1950 is 9.3%, compliments of Ryan Dietrich at Carson. Earnings are expected to remain strong. $300 estimates, 265 holding up. How you doing? Now those might actually begin to go up. We're beyond the takedown period. We're now in the back end load period. Sweet spot for the rest of the year. Performance up 5 to 10% at the midpoint of the year on average. Full year return 13.8. We're at 5. That means another 8, which means indices subdued under the surface firecrackers. It was amazing how much money has come in this quarter. And I thought, man, I'm probably going to be sitting on this for a little while. Market feels a little bit frothy. And then I looked through and I was like, no, there's so much to do right now because that rotation under the surface, you're just seeing the laggards start to get bid and they're taking off and we want to get in while we still have low prices. So it was exciting to see all the continued opportunity and excited to put the rest to work this week and in coming days and maybe week to 2 weeks. Some stock now, some options later, etc. Super excited. Qualifying income for a starter home now up to 101,000. Time for positioning chase into small caps. Flow still negative despite bounce. You can't give them away. Once it's when they're up here breaking into new highs, everyone will be chasing. Same story, different date. First half 2025 total return. Poland is leading. Greece, Austria, Spain, South Korea, Italy, Germany, Mexico, Brazil, South Africa, Netherlands, China, France, Switzerland, Singapore, Vietnam, United Kingdom, Canada, Japan, Australia, Taiwan, Philippines, followed by the United States. Equity market, first half, 6.2%, among the worst in the world. Only worse is India, which everyone couldn't get enough of, Malaysia, Indonesia, Saudi Arabia, Turkey, and Thailand being the worst. Maybe we got to look for some stuff in Thailand. So there you go. Once it turns hard. International outperforming U.S. U.S. equity underperformance tends to be accompanied by dollar weakness. This has been part of the theme, ladies and gentlemen. And what are we seeing? We are seeing dollar weakness, international equities outperformance. Policy uncertainty at all-time highs, but earnings uncertainty close to 5-year lows. So earnings certainty is coming back now that a lot of the chaos is in the rearview mirror. And by the way, to Trump's credit, that's the time to do it. The minute you get in the door, you throw in the kitchen sink, and then you get all the eat the crust first is what mom and dad used to say, right? You don't like the crust, eat the crust first, and then get to the good stuff second. S&P 500 leverage is near record lows. Wait till rates come down and companies starting issuing debt to buy stock and to buy other companies. It's coming to a theater near you. You know what else has happened, ladies and gentlemen? How about 2001, which has been an analog for a lot of the exciting things that we're talking about and happening and have been occurring. Dividends should contribute more to total returns than during the last decade's ZIRP, zero interest rate policy. I'll tell you what companies don't have big dividends, Mag 7. I'll tell you what companies do. The laggards that are starting to rip the shorts faces off, and there's still a window. It's closing. There's no question it's closing. So kudos to you who got in this quarter. Super duper happy for you. It seems like there's always stuff to do, but sometimes are better than others. And I'm just seeing these things start to go now. Like I was like, PayPal jumped up from 58 to 75. And then I was looking, I was like, God, that's moved a lot. Do I put new money to work here? And I just zoomed out. I was like, are you kidding? Like, how much money can we put to work? So it wasn't a hard decision. China and Vietnam export values, exports to the U.S. China exports to Vietnam have gone up because of the tariffs. Vietnam exports to the U.S. have gone up. And I guess this red line is China. I don't know why this is not labeled well, but okay, chart of the day, moderating earnings, and that is 5%. Okay, so here's the name of the game. Expectations are low going into earnings season. They're down from 9.3 to 5.0, which sets the bar low for them to beat. Okay, so my guess, 8 or 9%. I could be wrong, but that's kind of been the theme, and I think that'll be the theme moving forward. We probably get an early pop in earnings season, and then people get tired. They check out. They go to the Hamptons. They go play Maidstone and Spyglass and not Spyglass. Jesus, I'm a West Coast. Excuse me, I'm a West Coast guy now. National and all the great courses out there. U.S. dollar overall positioning. Short in the hole now, ladies and gentlemen. Maybe we get a little counter trend bounce. U.S. household ownership stocks as a percent of total assets is knocking on the door. That means Mag 7 predominantly. That's where they're all crammed. Apple better get his AI game intact. Jeff Bezos is selling stock. $666 million of stock, which is kind of lunch money for him, but at the same time, it's not nothing. So just paying attention. But the Palantir guys make them look like a piker because they're selling like their pants are on fire. At least Bezos is modest about it. Someone's got to pay for the gas on the yacht. But I mean, these other guys, holy cow. All right. S&P announced buybacks continue to go up. Household leverage percentage. Man, this couldn't be better. Look how it was before the great financial crisis. The household balance sheet hasn't been this healthy since the 1960s and the 1950s. I mean, all that means is rates go down, either Powell gets out or Powell wakes up, and the animal spirits are back. HELOCs will be going out of style. Your local baseball stadium will be sponsored by Rocket Mortgage and all of the co. S&P companies will be able to relever. Households will be able to relever. Credit expansion will be on. Boom, boom, boom into the early 2030s. Price changes for selective market classes year over year. Oh, that's from Cox Automotive. So EVs have gone up the most in price, and now their credits are getting taken away. That's going to be a tough sell, ladies and gentlemen. Welcome to the era of hybrid nation. Although Americans, they still want their big trucks. You're never going to take them away. And now you get they're going to personally deduct $10,000 in interest. You'll be selling Escalades till the cows come home and F-150s. 25 worst performing Russell 1000 stocks. Let's take a look for some opportunities, ladies and gentlemen. Is there anything here worth paying attention to? You're all going to ask me about Restoration Hardware. I got to go to that restaurant and check it out. They have a restaurant at the top of the one. That's not my cup of tea. Newell, that thing has just been dead forever. VF Corp, easy to put new money there. That was like a complete no-brainer this week. Super excited about that one. Bracken's going to be completely fine. We ran it up to 28. I'm like, oh, why didn't I sell some at 28? Because I didn't get in for 28. I got for $50, $80, $100, and Bracken's going to deliver. It's just off on the tariff BS. It will be fine. He's already told you in the last conference call he's got it solved. Market's pricing in 150 cost. He's like, no, we're gonna manage that. This is one more bite at the apple before we go. And we've been to this movie before with other names and they just took off. So that's that. American Airlines, maybe, I don't know. That's a trade. That's just not a great business. Olin, I love the chemical stuff. UNH, maybe. Lulu, maybe. Boston Beer, no thanks. All All right, investors are selling winners and buying losers so far in July. How you doing? Rotation Nation, ladies and gentlemen. I've been telling you, here we go. It's funny. I had a lot of clients call me and thank me for that call I did for clients on that Monday, April 7th. I did a 30-minute call. I said, now's the time. Put in money if you're thinking about putting in money. And we just rocked it. And I said, as amazing as we did because of that, I'm looking across the portfolio and the big moves haven't even started yet. I mean, it's unbelievable. One, how we've been able to do, and two, what we're going to do is my view. And I couldn't be more excited, especially putting new money to work. I was just like, wow, I can't believe there's still so much to do. Disconnect between, that won't be the case for long, but then there'll be like defenses of it. There's always something, but there's sometimes that are just easy pickings, and we're still kind of there, even though the window's closing quickly. Russell 1000 stocks in the first half of 2025. We covered that. Disconnect between. Wow, that's amazing. Yeah, they really did buy the worst stock. Fed expectations in equity markets. U.S. cyclicals versus defensives. There are some defensives getting sold off here. Forward swap rate. I wish this went back a little farther. Okay. Risk appetite starting to pick up, not at an extreme. Again, I think there's more room here in the next few weeks, even for the general indices, which means these Mag 7s trade to the top of the range. What's your sector outlook for the next 30 days? So everyone's bullish on financials, opinion, and tech. Opinion follows trend. No one wants discretionary. No one wants the VF Corps, the Nikes, the geese. They don't want energy. They don't want real estate. Even CCI, I like here. I like that rates kind of backed off a little bit. I think CCI at 100 makes a lot of sense. S&P sector level bottom up, target price versus closing price. Healthcare has the biggest spread between current price and target price in aggregate. There's opportunity there. Highest level of multifamily completions since 1986. They're chasing the dog is chasing the tail. They're looking at what worked yesterday, creating supply. That's going to be the glut of tomorrow. Multifamily is going to glut like nobody's business. And as more supply comes on for single family, as Trump opens the 512,000 acres, as the incentives from the big, beautiful bill go into effect, 5,000 new home buyers, all the other advantages, rates come down despite Powell. First half asset class returns and drawdowns. US dollar, weakest opening first half. No one expected except the great people of the Hedge Fund Tips with Tom Hayes community. US small caps, tough time, on their way to the promised land. Emerging, what else? Cash did poor. Fixed income did poorly. I think that changes the second half. Commodities, opportunities, second half. And then ex-US did the best. Healthcare provided, what do we got here? Healthcare provided biggest boost to private U.S. payrolls. They're not hiring by accident, ladies and gentlemen. There's going to be pony in the pile. We're going to talk about one of our holdings that just got a new CEO, a turnaround Tom type of jockey. Very excited to. Don't know where the radio voice is coming from today, ladies and gentlemen. I don't know, but I'm having some fun. S&P is entering its best seasonal weeks, the next couple of weeks. Gaining currency, stablecoin market capitalization going through the roof. PayPal might be a surprise tailwind that wasn't in our original thesis that takes it to the promised land. Sixth largest stablecoin issuer, network of 435 million people around the world. Could be interesting. Professional managers buy tops. They're not buying. So we got time. U.S. MBA mortgage applications ticking up as rates came down a little bit the last couple of weeks. Percent of stocks outperforming the world index above average right now. Breadth is improving. Emerging market assets and gold benefit most from a weaker dollar. Change in median home price from prior year. Cape Coral metro area. Florida, negative 25%. Negative 25,000. Wow. Florida is a leading indicator. Good additional note there, Jeff. Chart 2. Fed paralyzed by Trumpian uncertainty. That's one way to put it. On to the articles. Hong Kong listings pipeline hits record high as equity market booms. All those fees should have been U.S. banks. Instead, we gave it to China or Hong Kong. Calls grow for China's household sector to be bigger economic driver. That's going to benefit BABA. China June car sales hit record for the month on subsidy boost. It's funny. Western investors get so nervous when the government does negative things, but when they do positive things, they don't believe they're going to work. You can't make this stuff up, but that's fine. It gave us more opportunity. By the way, first time in a long time that we've been able to put new money to work in Alibaba, which is super exciting. I never thought I was going to get to a point where I'd want to put new money again, just ride it to the promised land. It gave us another bite at the apple. You know, I was talking with just a great client of mine, by the way. And, I said to him, I said, look, there's no invisible force, but I got to say, like, if I was running the world, this is exactly what I would have the chart do to just screw all the people who wouldn't buy it at 60, bought it at 148, just completely destroy them until the next move straight to 200. And that's exactly what's happening. He's like, I agree with you on both counts. Number one, there's no invisible hand. Number two, it's acting exactly the way it should. And he's a super smart guy, finance background, business builder background. Best of names to meet with Chinese official in the next few weeks, probably next catalyst. JP Morgan says China's crackdown on overcapacity may boost stocks. You think? Stock pickers shine, sniffing out value during market tumult. Value investing was out of favor, but 63% of active managers investing in cheap large cap stocks outperformed their benchmarks. No question about it. Value managers found opportunities from industrial firms, which rallied 11%, avoided bond proxies like Staples, strength in industrials, and expectation of interest rate cuts led some market watchers to anticipate broader strength from the value sector, with value stocks outperforming each of the 12 style factors tracked by Bloomberg. Unloved stocks rally is luring some big buyers off the sidelines. Unloved stocks, baby. That's what we love. Russell rips, shorts torched as laggard goes leader. I love a headline like that. Small cap stocks get a big, beautiful boost. That's from Jacob Sonnenschein over at Barron's. Great article. Goldman lowers Treasury yield forecast on rising Fed cut bet. How you doing? June jobs report was not strong. And you can see some data here and some commentary. Cautionary signals emerge in latest jobs report. That's from Bloomberg. Point is, it's time to set the table for Powell to save face and do the right thing. That's half the battle. He can't save face now because Trump is, he doesn't want to be bullied. So they'll figure out a way. Home buyers finally responded after mortgage rate hit lowest levels in 3 months. First-time home buyers are MIA. Landlords are the winners until they're not. Housing market deals emerge as builder inventory hits 2009 levels. Number of unsold completed new single-family homes in May 25 hit the highest level since summer 2009, spurring bigger builder incentives and deals. This is the car story all over again, a year behind. Cars are going to go bananas as rates come down. Housing's going to go bananas. And if you don't have exposure, you're just not going to get incredible performance. You can go chase NVIDIA at the highs. You can go chase Palantir while they're dumping stock in your lap. Or you can go where the puck is going, not what worked in the rearview mirror. How to save thousands on a car by stacking Trump's tax credits with Biden's. I didn't know Biden had a tax credit. Oh, for EVs. Okay, so you can buy an EV, even though they're up 12% year on year, and get a $7,500 EV tax credit and $10,000 interest on the loan. So there you go. From now through September. One last hurrah for the EV land. EU-US trade talks focus on tariff offset for automakers. See how that goes. Boeing, he's going to say, I tell you what, I'll do zero. Just make them all in the U.S. Boeing delivers most airplanes since late 2023 after ramping up 737 MAX output. The game is on, ladies and gentlemen. You were there for the turn. You hung in there from 150 down to 135. Most of you bought a lot more at 135. Now we're at 230, headed to 300. Retail buying and participation blow away all records in the first half 2025. And you know what? They've been damn right since COVID. Here we go. Baxter International, the sleepy do-nothing giant for the last year, names ATS Andrew Hitter as next CEO. Medical products maker says Hitter will assume his responsibilities no later than September 3rd. Your last few days at the beach for the next 5 years, Mr. Hitter. You got some work to do, but we know you can do it. How do we know? Because you did it at ATS in 2017 when the stock was at $7. And by 2024, just 7 years later, you took it to close to $50. So 7-bagger in 7 years. 7-bagger in 7 years, ladies and gentlemen. This guy's a winner. Now we got him at the helm of Sleepy Baxter in the healthcare, which is left for dead, which is now going to start to rock a turnaround Tom style. Trump's energy department warns Americans could face 800 hours of blackouts by 2030. Not if they have a Generac generator, ladies and gentlemen. That's one that's run away that I can't put new money to work. It's up 30-something points in a short period of time. But we'll see. It's tempting me. It's sitting there smiling and saying, come on, buy me. You know I'm going to 200, baby. And I'm saying, yeah, I know, but like, you know, you got to calm down. You've had a good run here in the last couple of months. Plenty of gas left in the tank. Stock market and sentiment results. Article of the week. Comstock Resources update. Each week we try to cover 1 to 2 companies we've discussed in previous podcasts, VideoCasts for our own clients, including personally. I eat my own cooking, ladies and gentlemen. In late 2023, we came out publicly with a new position in Comstock Resources, a name that had been left for dead and one you practically couldn't give away. A combination of record domestic natural gas. We actually went in earlier than that, Jeff. I know there's no articles on the site, but we went in on the podcast. Anyway, the point is your price is correct because we wrote it up. If I'm not mistaken, we wrote it up to 20 and then it came back down. We loaded a lot more and our basis is now high 8s, low 9s across the board. Then it ran up to 31. Now it's breathing for a little bit. Combination of record domestic natural production, flooding inventories, milder weather, lowering demand, and being blindsided by policies slowing LNG export projects crushed the stock and sent natural gas prices to their lowest inflation-adjusted levels since they began trading on the NYSE in 1990. We saw this as an opportunity and started adding around $8 a share basis. That's correct. Getting our hands on as many shares as we could as the stock drifted lower into the $7 range. That's correct. And 2 things stood out to us that made Comstock a no-brainer. First, We were investing pari passu with Jerry Jones. While he's best known as the owner of the Dallas Cowboys, few realize he built his initial fortune in the oil and gas business and now controls 71% of the entire company. His track record speaks for itself, and in public interviews, he's openly stated that his oil and gas interests are worth well more than the Dallas Cowboys, aka the most valuable sports team in the whole world at nearly $11 billion. We agree. Second, Comstock is the lowest cost producer with a cost structure that's 48% lower than peer averages. We believe in the long-term natural gas theme, and Comstock is undoubtedly the most efficiently run pure play in the space. In other words, they perform peers when prices are in the doldrums, and when the cycle inevitably turns, they have the greatest operating leverage. The best part, and something that wasn't even baked into our original investment thesis, is that while prices were in the gutter and much of the industry was hiding under their desks in the fetal position, Comstock was quietly playing offense, looking for the next big drilling opportunity. Management spent the last 5 years studying geologic data and signing over 20,000 new drilling leases across a massive 520,000 net acre footprint in the Western Haynesville region. This region is still virtually undeveloped, with management calling it the Holy Grail because they expect it to yield significantly more resource potential per section than their legacy Haynesville assets, with potential for thousands of future drilling locations. For context, legacy Haynesville region has 1,300 net locations and 904 net producing wells across 302,000 acres. Western Haynesville covers 520,000 net acres, but currently only has 19 producing wells. By all means, this is very early days. Meanwhile, it's perfectly situated about, isn't it exciting to take a stock that had a 3.5, 4-bagger and it's very early days? Meanwhile, it's perfectly situated about 100 miles from both Houston and Dallas, prime locations for future data centers that management is already in discussions for. This is on top of its proximity to the Gulf of America, which is home to more than $100 billion in LNG terminals and continues to rapidly expand. With LNG capacity growing and AI and data centers driving electricity demand to record levels, the real question over the next few years will be, where will all the natural gas come from? Comstock will happily be there to answer just that. ChatGPT queries are 6 to 10 times as power intensive as traditional Google searches. U.S. electricity consumption from the EIA, 1990 to 2026, is up close to 60%. U.S. Henry Hub natural gas spot price going up. Oh, and by the way, this is all happening while managers are still sitting near record low allocation to the energy sector. This move will be hated on the way up and chased when it's too late. We will be smiling so wide we could eat a banana sideways. Global energy. Here's institutional, quote unquote, smart money positioning. Gonna miss the boat again. 1 standard deviation below its long-term average. And here are some highlights from the earnings. Operating cash flow was $239 million. All the numbers, all the metrics going up. You can go to hedgefundtips.com. While you're there, click on terms. This is all opinion, not advice. Money management, we're closing today. So if you didn't get in today, at least put your name in today. You got to wait till next quarter. If you're the small accounts of $1 million to $5 million, if you're the normal accounts of 5 or 10 million or more, you can come in whenever you damn please. We'll pick up the phone and you can just say, I just called to say I love you, and we will happily accommodate you at your convenience. Moving along. Here you can see the free cash flow gains year on year, the net income gains, the oil and gas sales, EBITDAX, etc. Natural gas price realizations going up. Great liquidity through 2029, 2030. Good balance sheet, huge opportunity. In Western Haynesville, drilling results, laterals going wider and wider. More output for less cost, lowest cost producer by a mile. Look at this. They're 8 competitors. The nearest one, they're at 83 cents. Their nearest one is at 95 cents. And the worst, the eighth one, is at 272. Best in class cost structure of gas producers. PV10 value worth 5.7 billion. It's nothing compared to the unproved reserves that we're talking about here, which is probably another 10 to 20 years of untapped or unrecorded assets. You can go through the conference call, and I would suggest you do. It's funny, someone said to me, well, you can just summarize all of them with ChatGPT. I said, great, I hope you do that, because you're never going to get the nuance and really understand, and you're going to lose all the edge. So summarize away, and we will do the work. Alibaba update. A few weeks ago, Alibaba released its annual letter to shareholders despite the price action, which we welcomed, as it gave us a chance to put new money to work for the first time in a while. The biggest takeaway is that the business continues to fire on all cylinders. Nothing we didn't already know, but here are a few highlights worth noting. International commerce remains on track to achieve its first profitable quarter in the coming fiscal year. Other previously loss-making businesses are now on track to reach profitability. Revenue from AI-related products posted triple-digit growth for 7 consecutive quarters. This is the cheapest, best AI play in the world. I'll repeat it. Revenue from AI-related products posted triple-digit growth for 7 consecutive quarters, helping drive overall cloud revenue back into double-digit growth. Number 1 cloud player, number 1 retailer to the middle class, international growth booming. Management repurchased $11.9 billion worth of shares during the year, reducing the share count by 5.1%. That was on top of $4 billion in dividends and special dividends paid during the year, with another $4.6 billion in dividends already announced for the current year. Alibaba remains the number 1 e-commerce platform in China, with total e-commerce now making up nearly 27% of retail consumption and reaching over 1.1 billion internet users. Management is doubling down on instant commerce, offering nearly $7 billion in coupons over the next year to gain share. Daily orders have already reached 80 million, and twice daily active users have passed 200 million, around 40% of market share in just 3 months. Sentiment is getting a little bit too greedy, so maybe we get a little pause in the rally. And congrats to everyone who came in this quarter. Very excited for you. Very grateful to have you on board. Defense and aerospace earnings estimates revisions, top 30 weights, revisions in the last 60 days for this year up 86 bips. Next year up 90 bips, almost 1%. Energy down. Up-down ratio, down 1.68%, and 2026 down 2.09%. Let's take a look at some economic data. Small business optimism still pretty high, little less than expectations. Consumer credit is lower. We got to bring those rates down to get some credit expansion to make this thing hum. Welcome to capitalism. And we got initial and continuing tomorrow. And then we got some inflation, I believe, next week, which is going to be the key numbers. CPI on Tuesday. That'll be right before I go on Varney. PPI on Wednesday. Retail sales on Thursday. Busy week. We talked about earnings expectations, so we got that. Let's move on to Ask Me Anything questions. We got quite a few great ones this week. Let's hear from the first person, whose first name is Common, last name is Sense. Last 30 days, PDD is up 3%, while BABA is down 15%. Is there something to be concerned about? Your investment framework is to be concerned about. You're focused on price versus value, and that's how you wind up getting flushed out of great stocks and tempted by mediocre stocks. So beware. Question, what do you say about Arrow Electronics? I'm guessing this is not going to be something that fits in our framework, but let me be open-minded. This is likely a new listener, so welcome to the podcast. Yeah, this is something that's already double off the lows and now wants me to look at it. So first off, I'd like to welcome you to Hedge Fund Tips with Tom Hayes. You're going to learn a lot. I hope you'll tune in every week, and you'll learn a different framework, and you'll see whether you're genetically made up to invest in this way, or if you want to follow a different strategy. There are plenty of ways to make money, but we do the one that works consistently for us and for our clients, and we don't chase things that have already run. But I'll tell you what I think generically. From a trading and positioning standpoint, I would never buy it here. From a general, no. I mean, revenues are falling off a cliff here, and price is near all-time highs. So, I'm not going to spend a lot of time on this one. I'm just going to pass. It's probably an okay business, but it's priced in what it's already doing. FBIN. Great question, by the way. I hope you have more in the future. FBIN. Fortune Brands. Ooh, this is interesting. Okay. So, prices followed cash flow. Let me do something else here. FBIN. Okay, so cash flow collapsed for a little while. Revenues have been flat to down for a while. Margins are starting to tick up. Home and security products for residential home repair, remodeling, security applications, water outdoor security, faucets, accessories, kitchen sinks, waste supply. So it's a housing play. Decking. I think this is probably okay. Let's see. Master lock, thematic doors. Yeah, I kind of like this. Probably down on the tariff nonsense, but the demand is going to be so big. I don't know if the upside's big enough for me to get attracted, but this thing's going to trade up. This is definitely going to trade up, and I think that you have done a good job, Mr. John Garvey. Lee Foster. What do you think about Valet? Stepping on Albemarle's toes in the material space, which I have a position in. By the way, Albemarle's starting to rock, isn't it? That's $70 up from 50. We're on our way. And so you look at these things, it's like, God, it's moved $20. But then you zoom out and you're like, yeah, and it's just getting started, homeboy. Like, all right, so you got to buy it up $10. So what? What do you think about Valet? Do you think iron ore is close to bottoming? Good chance of a double from here. I've never liked Valet. I don't like Valet. I don't like Tinto. I do like Albemarle, though. Let's just see. Yeah, I just don't like it. I don't like it. And when I answer quickly, it's not like because I'm not doing, like, I've studied the business many times over the last 20 years. So, like, I just don't like the business. Phil Truck. Hey, Tom, 26 years old, been a listener over a year now. All right. Awesome, Phil. You truly have been life-changing with your opinion, not advice. Thank you. Thank you for all you do. What I gathered, SAR was about 16.2 million. That's annualized first half 2025. If we get something equal to or greater for second half? Wouldn't it apply $4 base case? It could be in that neighborhood. I think at some point, $35 a share, we're already starting to price in $3 of earnings. We're not there yet. So look, they're doing everything that they can control. All we got to do is focus on the volumes. And if the volumes come from getting Powell under control, Bessent doing what he's going to do with the 10-year, and the big, beautiful bill, tax deduction for interest payments on U.S. cars, I think it's going to boom. I mean, and I think when it turns, it's not going to be like 2, 3, 4 over the next 3 years. I think it's going to be like $3.5, $6, $10 a share in earnings. And everyone's going, what the hell happened? And on the catch up, the multiple expand from 8 times to 15 or 20 times. And we'll make a lot more money than we've even already made. So that's that. Good question. Griffin Brown. What are your thoughts on the possibility of AI taking over entry-level analyst and research roles? Should young aspiring analysts be deterred from the field because of this, or do you think it's just noise? I tell most kids or young people, go build a business in your 20s, and you'll either get rich or you'll fail in your 20s, in which case you can always go get a job. If you really love it and you think you're smarter than the average bear, I would do it, because if you're exceptional, you'll do fine regardless. I do think it's going to have an impact on that aspect of the business. It's going to be way more competitive. You're going to have to be better, but the ones who are really good will never have any competition. Robots are not, because there's some intangibles that the robots can't replicate. But the problem is it takes many years to build those intangibles. So I would say follow your passion. At the very least, you're going to learn the language of business, which is accounting and understanding financials. And if the industry gets tougher and you can't meet your goals doing what you thought you wanted to do, you'll have a great financial background to do anything you want to do. So follow your passion. If you're exclusively going in because you think that's the way you can make the most amount of money in the shortest period of time, I think you have a better chance of getting rich in your 20s and 30s building a business. But if you grind it out by your 40s, you can make more money than you could ever possibly imagine, because you'll be that good that you will be generating the value in the marketplace that warrants making exceptional amounts of money. And in your 20s and 30s, it's very low probability. So if you're taking the long view because you love it and you're willing to eat dirt for 10 years, then have at it. And you should do it. But if it's like, I just want to get rich and drive a nice car, like, build a business. David T, can you take a look at WFRD? Possibly better than SLB as far as turnaround is concerned. WFRD. Oh, the old Weatherford. I forgot why I hate this business, but let's take a look at it. Maybe it was a bankruptcy reorg or something. WFRD. Yeah, looks like it was a bankruptcy reorg. Maybe they'll get it right this time, but there's probably some of the same actors involved. I would check that out. Nah. Don't take the second prettiest girl in the ugliest industry. Take the prettiest girl to the prom. Eric F. Dear Mr. Hayes, I've listened to the podcast for about 4 months. I really admire your persistent, optimistic outlook on opportunities in the market. Does your optimism stem from a viewpoint there's always a turnaround opportunity somewhere? Or are there times during your career when you're not so optimistic and perhaps neutral or even bearish? Many times I've been super bearish. And when it was justified and the right time to be so, it hasn't been. And it's not going to be more likely for some time. Yeah, you're going to get some chop in the fall. Suck it up, Buttercup. But we're going to resolve higher before the end of the year. Unfortunately, there are not enough hours in the day to review all your past episodes to understand how your outlook has changed through the years in different market environments. Thanks, Eric F. So I hope I answered your question. There are not enough hours in a day. So there are 168 hours in a week. I've done 299 episodes. So it would take you 4 weeks to learn 40% of what I've learned in 20 years if you wanted to make it a career. But don't do that. It's too hard. Matthew Gunty. On the podcast, you can speak your thoughts on investing the S&P right now, given very high valuations. All right, your numbers are wrong, but your thesis is correct. Do you think it's time to sell? I don't know. I mean, when you're asking me about the S&P 500, you're asking me about Mag 7. I don't have a view. We're not correlated to the S&P. Yes, if the market goes down a lot, our names will be hit. But if the market grinds sideways, we're gonna make a killing. So that's kind of my base case. Sideways, maybe 5 to 10% pullbacks in the fall. But being in the right names, it's not even going to matter. I don't even think about the indices. It's the farthest thing from my mind. I just look at it on a business by business basis. If JP Morgan was going to underwrite me buying 100% of the business, the only catch was I had to put 100% of my net worth as the equity. So if I'm right, I make 20x on a double or whatever. And if I'm wrong, they get the whole business and I get wiped out. If the answer is yes, I would do that deal, then I make it a position. If the answer is no, why would I even buy one share? So as far as buying the S&P, it's like asking me, do I like vanilla ice cream? I mean, no, man. I like Graham Central Station at Handles in Orange County. They got a few of them. They've got Irvine. They got Newport. They got Huntington Beach. Best ice cream you'll ever have. Never thought I would like it, but I asked the guy, what's the number 3 sellers? He said Cookie Monster, Graham Central Station, and something else I would never eat. So pass on the blue Cookie Monster, tried the Graham Central Station. Worst thing I ever did because unfortunately I can walk there. And if I walk there and get Graham Central Station, I better walk 18 holes the next day. Joseph Gualtieri, would you take a look at Jack? I've been looking at Jack every week for many weeks, and I want to buy it, and I'm not gonna. Because it's a mediocre business. It's on the West Coast. We're probably a little over-restauranted. But this thing seems to have 9 lives. So I think you're going to be right, and I think I'm not going to participate. But in the meantime, let's take a look. Jack. Who's this guy? Joseph Gualtieri, a guy after my own heart. What are we doing here? Cash flow starting to recover. Margins are okay. Returns on capital have been crap. Turnaround story. So just tell me what the turnaround is. That's all I want to know. You're tempting me, but you're not exciting me. Take a look at the balance sheet. Better look at it quarterly because it's not looking good annual. Not a lot of cash. You got $1.6 billion in debt and $75 million in cash. That's not good, my friend, and that's probably why I keep passing on it. I mean, they'll probably do some cockamamie raise now that the market's up. but that's a binary event. They've got 19 million shares outstanding. $5 million shares at $20. They raise 100 million. Ugh. They dilute you 20%. They live another day. Probably pricing in some dilution. Just tell me how's the business going to turn around? Do they have new products? Last time I checked, they're just trying to sell everything under the sun, throwing shit against, excuse my language, against the wall and hoping something sticks. I think something's going to stick. I've eaten there before. It's okay. I don't know. I think you're going to be right on this one, but I think you really got to do some work on it. I do think you're going to be right. Just instinct, but like as far as risking my and other people's money on it before doing a ton of work, no. Maybe I'll go listen to a few conference calls and take a look. But yeah, it keeps showing up on my list, and I keep, probably because I keep worrying about solvency risk. But yeah, I got to maybe dig a little deeper. It's in the discretionary category. I like that. Bob Atkins asked about ConAgra, CAG. Ooh. Let's see, Bob. Love these defensives getting smacked. What is this? This is not my thing. CAG. I think you're on the right track. What do these guys make again? It's a food business. It's kind of like packaged foods. This is like the most hated group in the world right now. Packaged foods with RFK Jr., Birdseye, Mary Calendar, Duncan Hines, Healthy Choice, Slim Jim, Ready Whip, Boom Chicka Pop brands. Incorporated in 1919. Wake me up at $17 a share. I may never get it. Let's take a look at the balance sheet. I prefer Hormel, but let's just take a look. Annual. This is, yeah, so this is probably your issue. No, this is a problem. I'm not sure how they solve for this, but they got $7.2 billion of debt and $77 million of cash. I mean, they've been running like that for a while, but $1.6 billion of free cash flow last year. I think it's worth doing some work on. It's not for me. It has to get a lot lower. But I like the idea. Alex Coe. Great podcast. Thanks for sharing your knowledge every week. Well, needing, if you think Adobe is bottoming out and worth a look. I'm not in love with any software stocks right now because I don't know how AI is going to affect them. And that's always been like why Buffett's, you just changes. I think you're probably going to be okay with that. I think I'm probably not interested in it. Right now they're doing fine. I mean, it's like Google search. It's like they're great until they're not, or they're great, period. And it's an overwhelming fear. That goes in my too hard box. I don't know enough about the software and the moat. I understand creators use it and it's the thing and blah, 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 but I don't even know what I don't know about how AI is going to disrupt that. I do know they're not going to disrupt putting tar shingles on roofs with QXO and Brad Jacobs. They're just going to make them more efficient and wring more profits to the bottom line. Eduardo Gonzalez, want to thank you for all the great information on the Content Podcast, a longtime follower. Thank you. And no, I can't wait every week to watch your new podcast for the week. I work on the oil field since 2008. Awesome. Start investing 2019. Go with the flow. I found you and heard you were pounding the table on banks when no one wanted them. Invested, focus. Thank you for all you do. Can't be one of your clients yet. Don't have $1 million. Okay. Ask you about Brazilian company Petrobras. Is it worth it to take a look? Yes, Petrobras is always worth it to take a look, except when Lula is in power and could cut the dividend any day he wants. He probably won't. It's run too much. I think your better play right now is some of the highest quality servicers. Mark Thompson. Could you take a look at Yeti? We've looked at Yeti many times. Good business, good price, probably okay. Consumer discretionary, beat to death, will bounce back. The Louis Vuitton of ice coolers for rednecks and people like me who like to go to parades on the 4th of July. It's not enough. There's not a lot not to love here. Obviously, it got ahead of itself during COVID. I think you're okay with this one. I've looked at it a million times. I haven't pulled the trigger yet because we have discretionary exposure, but I think you're right, Mark. Jerome Parker. BXMT, Blackstone Office REIT. It's not an office REIT, it's a mortgage trust. So pass. Completely opaque. Henry Dubiel. Huge fan of the podcast. Been spreading the good word on hedge fund tips to friends and family. Thank you for that. By the way, if you're getting value and you can't afford to become a client, what I suggest or ask you to do is leave a kind comment in the YouTube comments, or leave any comment, if you're kind or not. That helps more people get exposed to the video. The more people that get exposed to the video, the longer we're going to do this for non-clients. And share the word. Share it with one person you love who you know loves the markets but doesn't know what the hell they're doing. And hopefully we can help them out. Curious if you have any thoughts on Charter Communications, trading at 50% off the 2021 highs, blah, blah, blah. Your guess is as good as mine on Charter. I continue to look at it, continue to do nothing. It's gone up while I've continued to do nothing. I can't really get excited about linear, even the high speed. There's going to be some disruption in rural areas. No, I think you're right, but I'm not interested. Manny B. CNC got smashed on the surprise Medicaid cuts in the big, beautiful bill. I think you got to listen to the next call and hear what management has to say about there's a rosy tomorrow. But for the time being, all these institutional players are smashed. It's going to take a while to build a new holder base. They've had a huge run on Obamacare. You can see the stock went bananas since Obama got in power. Little bit of a break under Trump and continuation under Biden. seems like that day is over. At some price, it gets very attractive. I think it's early as a major long-term holding. As a trade, it probably gets a bounce in the next couple of months now that the bad news is out. I think you keep your eyes on it. Right now, it's a falling knife, but I'd like your style. Martin. Grizzy-Wazewski. Martin Grizzy-Wazewski. What are your thoughts on... We just covered Centene. There you go. Two people had the same question. Thank you for sending it in. Robert. Following your podcast from Germany. Greetings, you have a long reach. I don't have saved enough that Great Hill Capital could take care of my portfolio. I'm wondering if you would accept clients from overseas. Well, why don't you give me a call after you save the money and we'll see if we can make that work. But in the meantime, I'm grateful for you tuning in and getting some value out of the podcast and improving your understanding of markets. Do you think if now would be a good time to invest in health tech ETF? Is the MSCI World Healthcare an ETF you would recommend? I don't really recommend ETFs. I like XBI now because rates are going to come down. I've liked XBI for a while. It hasn't done anything, but it's going to start doing stuff now. It's just been grinding sideways. We're going to the promised land. Detour. Going to the promised land. I think now we're actually going to go. MSCI World Healthcare. MSCI World Health. Oh, this is like a German thing. I think it's let's just XLV. Yeah. I think you buy the biotech basket. That's going to give you the biggest bang for the buck. If you're going to do healthcare, you got to pick discrete names. We've talked about a bunch of them over the weeks, but I think your thinking is correct. You're buying what's out of favor. This is Jim coming in. We already talked. You're set up. I think if you're not approved, you're almost approved. Okay, so that's that. With that said, we'll be back next week, same time, same place. We'll actually be back in California by next week. We're quick trip, Thursday to Wednesday, and that will be episode 300. How exciting is that? 300 episodes, almost 6 years. Super grateful for this incredible audience. Super grateful to hear the amazing stories. As a matter of fact, my assistant Jennifer had her pulling all the testimonials from emails and from comments and all the like. She's got, if you go to hedgefundtips.com and you click on #1 podcast and you see all the people who have bought Hedge Fund Tips with Tom Hayes merch. But beyond that, you see like 30 pages of testimonials. Look at all these awesome people. And then you just see tons and tons of testimonials. Well, I got her to pull together another 20 pages of testimonials. So we're going to have those there as well. So grateful for you guys. We'll be back next week. In the meantime, make it a great one. Bye for now.